Good afternoon, everybody. This is Dennis Wilton with the Active Trend Traders. Welcome to the Making Money Trading Stocks and ETFs webinar that we do try to do every Friday. Joining us from Zurich, Switzerland is Michael Bishop. Michael, how are you?
I'm great. Thank you for having me.
And
how about you?
I'm doing well. You were saying as we were chatting earlier that you kind of have been enjoying the volatility in the markets and trading the options and selling premium and just having a good old time, eh?
Yes, it's so much different than the last years.
Yeah.
So yeah. It's more challenging but more fun.
Yeah, it's definitely more challenging. You know, the pullbacks. What I'm seeing, it continues to be so in the markets, is that it's working between support and resistance. And so, if you do a good job of identifying your your floors and your ceilings, just trade between those. And so, let's get going. So, one reminder that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor promise of future performance. Here's a little bit about my background. I'm really enjoying, as I shared with him, my wife is learning how to trade futures. And so she's going about it in her methodical rule keep. She's probably going to be a much better trader than I am, and when I'll turn over giving the alerts to her, she joins me in the business. But one of the things that's really interesting is she's very methodical about how she learns and the processes of how she learns, and so I'm encouraging her to basically learn enough so that you can start trading, but to not get hung up with, because I run into many traders, Michael, who they think, well, I have to know everything before I can trade. And the better question for them to be asking themselves is, what do I need to know so I can start to trade profitably or consistently? And because that's a different question, because if you wait, if you wait to trade until you know everything, well, one, you'll never trade because you never know everything. It's a continuously moving target of knowing everything about the stock market. Don't you agree?
Oh yeah, definitely.
So, hey, the Active Trend Trader, we follow the 5 pillars of Active Trend Trading, and you've seen this chart before. Basically, what to trade, we identify that. This is an ETF in oil, what to trade, UCO. Then we identify where to enter, where to exit. Well, in this case, we entered a trade back here and the 319, and actually, we are still in part of this trade. When to exit, we exited for some of a partial profit up here as it broke out above this this target range up here at towards the upper level of the Keltners and the moving average envelope. And then what strategy we're going to use. In this case, we bought the ETF and to build a position. So what to expect? Our probability of success is about 65% on all our trades. And so, of 10 trades, or less, 10 trades, we expect, say 6 to 7 of them to be winning trades and 3 to 4 to be a losing trade, but we want to basically ensure that we are keeping a tight stop on things, but not too tight. And this is why we send out with our alerts a little table like this that shows where our where profits are, 5%, 10%, 20%, and what our stop loss is and how much we are actually buying. In this case, because we adjusted our stop from a 5% stop, we were buying only 430 shares. And as I said, we closed out part of that for some profit, and the other part is up nicely. The objective of our Making Money Trading Stocks and ETFs Friday is this one. Timely actionable intel review at the end of the week, market review market, and right now the market is somewhat mixed as of earlier. It looks like the S&P is up. However, the Dow was down a little bit earlier, and also the Nasdaq definitely getting whacked today. We'll see if it comes back a little bit prior to the end of the day, but that's what's going on. So here's where we're sitting. Let's go to the charts as soon as we get done reviewing this. Is with this week's down. This week was kind of a down week for the indexes, and so we dropped a little bit of our return, but well within the specifications of our system. So let's take a look at. There we go. And so we're going to come back to Tesla, but I'm going to cover here. I'm going to go to SPX. Okay, as you see SPX, daily, weekly. Okay, weekly chart, TSI, nice turn up. It's basically saying, we may be ready to go into a longer term uptrend, or at least back up here into these levels up here. That's what we're seeing right now. TSI on the daily chart did tick up a little bit, but what are we running into? We're running directly into the 8-day move, the 50-day moving average. And at this point, that's what's stopping us. Are we going to push on through that, at least back up to the 2,700 or the 2,718 level? We'll see what the market has to bring next week. We can draw in this trend line. I don't know where I picked up this little cough thing, but there's a nice little trend line that we can draw in there that will also probably work as a resistance level. And as you can see, it's going to run somewhere next week between about, basically the high here at 2684 all the way back up to about 2694. That's what I'm seeing right now. We got a really nice drop here, fell back to the 200-day moving average, found support, doing the rebound, but the rebound does not appear to be an exceptionally strong rebound. I think we'll see that when we take a look at Amazon. So right now, I'm not in a hurry to get long the spiders, Michael. Maybe we get some retesting back in this area, but with the large weekly ranges still in effect, we are close to a level of resistance, so it's not a great time to be buying. So we want to be paying attention to when. Oh, the other thing I want to show you really quick is we can also draw. We're in kind of a little pennant slash flag slash triangle move, and so price action can get all the way back down to this lower portion of the triangle, or it may just highlight right around there back to the in this case this would be the 40-week moving average, which equates to the 200-day. So anything on the S&P, Michael, that you just want to jump out and buy it right now?
No, definitely not. And what you see is we have really a totally different playbook than in the last years. I mean, now it's the big earnings season, and you saw a lot of stocks like Starbucks today. I think it opened pretty well, and results, everything was great, and it couldn't hold the wins.
Yep, there it is right there. Starbucks daily actually opened down.
Well,
But overnight, let me throw up a. Just let me throw up here. No, after it reported, it was hanging in there pretty well, but then it started selling off here. So quite interesting. Another one that's
even Microsoft, I think today. I mean, everything was great, fantastic numbers, etc.
Yeah.
And the stock was going up as a Microsoft, but I think it did. What's doing it?
Yeah, Microsoft was another one of those. After hours, on this, what the gray section is here. After hours, Microsoft looked like it was going to be breaking out. And then
Uh-huh.
whack, the live session started this morning, and it was just, hey, people, the rats were running for the lifeboats or something like that. And another couple of stocks that made some nice money yesterday on Amazon and FSLR by selling some, just prior to the close, sold some put credit spreads. It was Amazon. But it too is showing that because here's where we closed yesterday about 1525, and I think I sold either 1520 or the 1525 put credit spread, and it zapped up this morning very nicely. Is able to close that for next to nothing, and which was nice. But this price action does not speak well to the strength of the market. This price action where basically we hit this new high overnight, and then basically Amazon all day long has been selling off. And here's the daily chart over here on the sell-off.
Yeah.
See that? And so that is, where we have basically conflicting information. Gap up with earnings. However, we get this sell-off, and where did the sell-off come from? Well, let's take a look right here. There's would have been the breakout to new highs right there. So we broke out to new highs, and then whoops, there we go, processing to the downside. Interesting, huh?
Yeah. Yeah, bull markets die on good news, you say, huh?
That's true. I'll have to. That was very good. I'll have to remember that. Hey, here's FSLR. Same type of thing. It was painting about 75 yesterday before the close, and so just jumped on and because it was kind of like going into an uptrend, we had a nice little trigger up here with this hammer. The likelihood that was going to go higher was very much. So went ahead and opened I sold the 75 by 72.50 or 70. I think it's a 72 credit put credit spread, and it also worked out very well. Sold it for a buck 40. And bought it back this morning for about 20 cents. And so you always like those. And partly that's just due to the way implied volatility works over an earnings period. So let's go back and look at the rest of nope, not the yearly. I was doing some rearranging with but as you can see, FSLR, similar type situation. Look at that. Okay, yeah, it basically kind of opened here and ran up hard, but then the sellers came in. So if you are a trader of SLR, just mark that area as mark that as a point to that's where sellers came in. That's where sellers came in, and so. Yeah, Barbara, on that particular one, that was in one of my other accounts. It was not put out. Barbara asked, did any alerts go out on the credit spreads? And no, and they were so fast right at the end of the day that I could not have gotten those out. I mean, literally, it was with 2 minutes left before the end of the day. And so those were not sent out, and those will not be reflected anywhere in the active trend trading information. Now, let's see. Let's go over to NASDAQ. NASDAQ's kind of getting beat up today pretty good. Notice how NASDAQ gapped up with Amazon, with FSLR, and then all of a sudden sellers came back in. It did find support down here at what is that? That's the 100-day moving average, and started to push back up. Positive side, it appears to be closing up above the 20 or the 8-day and the 20. Going into next week, if it's going to go into next week with any strength whatsoever, it would be really nice if it would close above that yellow moving average line, which is the 50-day moving average. Again, similar to We did have a tick up on the TSI on the daily chart. However, and we also have a tick up going on the weekly chart, but that is a wide range candle. And again, we get a shooting star 1 week last week. Now we get a hammer this week. Now, of course, this was not at the end of a downtrend, and so it is not at the end of a downtrend, but it was just these two candles are direct conflict with each other, and they contradict each other. Sellers came in, buyers came in here, and it gets back to what we've been saying is pick your areas of support and resistance and then trade off of those. That was a significant move. If we go over here to the Qs, let's go over here to TQQ. TQQ, again, similar type situation. Came down off of 160 last week, came down into this zone we had highlighted earlier, dropped down to 132 for the week, and then pushed back up. Going into next week, what we'll do, folks, is we'll basically look at what, my trigger point is going to be right about the 40 week moving average or the 200-day moving average, about the 130, let's say 138 area. If I get an alert there, we'll look for it to potentially trigger a long trade. If we get back up here to the, somewhere from where it's at up to 149, and again, this would be on the Qs also, or in that area. What we do is we would switch over to the SQQ, which would be a SQQ. There we go. And where we picked that up is somewhere around the 1550, 1586 level. And so NASDAQ TSI crossed on, it looks like it crossed on both the daily and the weekly, Eric. So, okay, and let's run back over here on the Russell. Russell was holding, I still think Russell is holding up better than the other indexes because, one, it's holding its 50. It's this hammer candle on the daily chart is still in effect and still valid, where it bounced off, just shy of the 100-day moving average. And so it's in the zone with regards to, around these moving averages. Now, if it drops down back below this, look for a retracement back down to 1540. I left the fibs on here from this high to this low, just simply to get an idea of, okay, what did that, what could that have in store? Let's remove that drawing just briefly. Let's throw on another one from this swing low here to this swing high here. And what have we retraced to? Well, it almost got down to the 50, and it did not, this is kind of interesting, and it depends on how you draw these, did not close below the 38.2 retracement. And if we push on up from here, or if we get another test down here at the 8 or this 38.2, that might be a good place to, try to get into a long position to trade it to the upside. So anything on the Russell, Michael?
Not really, no. No, that's fine. Yeah.
Okay. TNA.
From the seasonality point of view, Russell is strong in the first months of a year.
Yes.
So maybe.
Yeah, and so. Yeah, and it will also, it tends to strengthen up towards the end, but right now it is just being stronger than the other entities. However, when we take a look at this, and keep this in mind, please, is that, get my drawings up here. What do we have going on? Well, look at this 50-day moving average going back to about February, and look at, that's almost trendless. While the shorter term moving average has been moving up, moving down, moving up, moving down. But in reality, we have very much not much of a trend here. However, it is a a nice little wedge, if you will, or triangle, where and it's kind of like in no man's land, but that's where we have to anticipate. Okay, if we're going to get a bid off of this at the 70 level, it's probably going to bounce up here to the 72.50 or maybe up to even to the 74 level. That's where you want to be looking at, hey, that's where I want to be taking off my profits. So, okay, I'm going to come back and do a couple of stocks. Here's where we're sitting as of again, just suffering a little bit of whipsaw on our P&L statement, but still continue to build on the way up. Gold seasonality, we are now into this part of the year, the May June time frame, anticipating the July ricochet in gold. NASDAQ, we're through March into April. NASDAQ tends to get a bid in the May time frame, but again, where's the main place we're looking for with NASDAQ is right here in the last part of September, October time frame. And then same way with on the Russell. Russell, we've moved on past here. May tends to be a little bit, weak, sideways, all the way through about October, and then October, Russell tends to get the larger move. Here's where we're sitting. We basically had a grub trade on. We had a real tight stop on that and got stopped out. And then the market reversed. What's very interesting, the market reversed and has basically, prior to earnings, pushed its way back up on grub, where grub is now currently sitting at about $99. And so our stop loss was at $99.50. We, would have made that back. However, we were going to get out of that. We were not going to take that loss on that. UCO, we still have on grub though, we still have one of our contracts left on grub. And so we had cleared out partial profits of $560 on part of it. We will close that final position on Monday prior to market close. Okay, here's what we're doing on strategy 3. And then, so that, we'll come back to the slide. I want to cover a couple of things prior to I reorganize my, earnings going into next week. Of course, we have grub. Okay, grub, as it turns out, hey, got stopped out of our position, has moved back up to around $100. If it moves on up to 105, I'll go ahead and this is going to close we will close the option position on that on Monday. Other reporting entities next week is Tesla. Tesla is bouncing its head up against nice reversal off of the zone. This buy zone was identified, and I think with the premium members, I think I'm going to start sharing. Well, I'll share some of the charts on these on the radar portion. Now I've shown some of those, but just pay attention because I draw these in ahead of time. That's where we're anticipating, a support zone or a floor, if you will. And the floor this week worked very well. It drifted, it stuck its nose or its butt down below the zone and then moved higher from there. And so it moved from 177, just a little bit over $10, almost $15 over the last 2 days. What is one of the others? We're looking at BABA. Again, BABA's up to 77. Anticipate, earnings coming up on the 4th. What else is going on next week you need to be aware of? Well, the other thing to be aware of next week is it's Fed week, and so on Wednesday we will get an announcement. And with the Michael, the market is basically has kind of a hair trigger right now, and it's in reactive mode to move either rapidly to the downside or rapidly to the upside. And so next Wednesday's Fed meeting could be really exciting. And so we'll stay kind of light on our positions through Wednesday. And I'm glad that Baba and Tesla has earnings after the Fed meets, because we'll be waiting until Wednesday, and also then when is this, 4th, which is next Friday. Yes. Yep. So we're waiting until the 3rd, because Baba has earnings before market, to basically sell some of our premium positions on this for strategy number 3. And what else is coming up? There's a couple of stocks coming up in the near future that we want to keep an eye on. YY is trying, and actually this may be if it didn't have earnings coming up here, this could be on the 10th. This may still be a really good buy down here around the $90 level, and between $91 and $90. So we're getting a nice TSI tick up a couple of weeks ago, but another one now. The weekly is trying to turn up, and I recognize, yes, it is below the 200-day moving average, but this is a long-term place where buyers had come in the past. So YY looks pretty good for earnings, pre-earnings run, and the other one, NVDA, also on the 10th. It's interesting. We know where the buyers come in at about 212.88 down to 210, and so, but we're not making it back up to the 50. And last but not least, what else we have going on? Oh, I wanted to share one thing with you guys. If you're interested in finding out more about, go to this website. It's free, earningswhispers.com. And I'll kind of show you exactly what's on the schedule for next week. We've got Apple, what the expected earnings are. Alibaba, what the expected earnings. NVDA on the 10th. Square, and it basically is a very interesting place to find out what the whisper numbers are, what they think is going to be the situation. So, okay, question for wedge, pennants, and flags. Shouldn't you expect the trend to be broken about 3/4 to 2/3 the distance of the formation? If so, wouldn't we expect things to move up? If it breaks, that's basically the guideline, Eric. You're absolutely right that if we have a triangle, if price action stays within the triangle and it moves past the, let's say, 3/4 point or 2/3 point, the likelihood of getting a breakout, goes down. So it goes down. So just and so if it's prior to that, you can anticipate. I wouldn't say don't over anticipate the breakout, but that's kind of the rule of thumb for you. And so, okay, Michael, anything that you would like to add, my friend?
Not really. I think what's worth mentioning.
Yes.
Well, if you take a look at the global markets, I mean, what's interesting to watch or to see is that now U.S. markets are the most volatile, and China and Japan are and also I think Brazil and Mexico are pretty resilient.
Okay. Yeah. And so, yeah, it's kind of crazy. It's like the U.S. market has just been just ricocheting about here of late, and so it's it's fun from the aspect of the if you get on the right side of volatility, it can be a big winner for you. unfortunately, if you get on the wrong side of volatility, it's not going to do so well for you. And we have a lot of, I was sitting there writing a note to myself, which I do often, about the contradicting, some of the contradicting charts we keep getting between, and the time frame is between the daily, the weekly, the monthly. Each one kind of painting a slightly different, one painting a bullish picture, the other one painting a bearish picture, and so it's really interesting. So, okay, please send me that article, Michael. I really appreciate it. And we're going to get ready for the final hour for our premium members. And so until Monday, aloha, trade well, and remember, Monday is the final day of the month, and so Monday could be very interesting. And again, and of course, so people, they have to get their window dressing in place. But also next week happens to be the Fed week, so I won't be too heavy at the beginning of the week, and we'll wait until the Fed, because I have a sense, and this is only a gut feel, is that if the Fed raises rates, that it could result in a negative trigger on the markets. But again, that is just an opinion and a gut feel. So until next Monday, aloha, trade well, and prosper. And so God bless everybody. Have a great weekend. Michael, enjoy the spring.
I will.
Okay.
Nice weather.
God bless everybody. Bye-bye.
Bye.